I see that a lot of you have joined in. Many familiar names. I'll give it a minute for everybody to join before we go on to the national anthem. Just give it another minute. I see there's quite a good inflow. So 11:02, Syed, you can start with the national anthem. Good morning to our honorable guests, clients, and speakers. Thank you for joining the webinar today. From Crowe, UAE, I'm Ilham Maniar, heading the corporate setup and IP. Today, we're going across the pond to talk about the latest tax and corporate developments in the UAE, and there are a lot of them. So one might think that we're going through a taxing time, but soon you realize that being in a regulated environment is a magnet for more success. So starting in 2023, the UAE is going to be implementing the minimum 9% corporate tax for companies in line with the OECD global negotiations that they've been having, and possibly more rules that target shell companies is also looming on the horizon. So what does this mean to you? So it's just regaining sight that companies need to overhaul the way they collect information internally to be able to effectively calculate the tax rate for that jurisdiction. And as part of the year of the 50th, we can see that the federal law number 32, which has come into force on the 2nd of Jan 2022, has introduced the law that protects the personal data. And this is the first of its kind. It's a significant step, towards the growth and development of the UAE. This law protects the personal data from being shared of a natural person. And it's similar to the GDPR of the EU, so it has very similar concepts and process, and even the appointment of the data protection officer. So it's going to be a very interesting era to be in. The law exempts people who are in certain free zones, such as the DIFC and ADGM, as they follow similar principles to the GDPR, and some of the government authorities, as they have their own legislation, the banks, and some free zones who are a part of the healthcare city, as they have their own laws that protect the healthcare. So next time you'll be filling anything online, or even you are at an interview, it'll be interesting to know that none of your data is going to be transferred without your consent. So it's definitely a great move that's happening. So with all these ongoing changes, there is no need to panic, because the underlying criteria is the way you look at the situation and the level of sophistication in addressing an issue in totality are those companies that will be successful. Giving tax a seat on the business table is what's required, but along with that, your business folks, the compliance, the governance, they all must be included, because when you solve one problem, it won't create another one, and that loop never closes. Otherwise, we'll be just running on a hamster wheel, just chasing the problem. And this is something I can speak from my experience and the practice of our firm. So given any situation or scenario, look at it completely, because this will definitely put you in a safe spot. So one of the common questions we've been asked since the time the law has been introduced are the considerations, what you can keep in mind to plan ahead. And we must put certain guardrails and optimizers in place to manage the risk that lies ahead. And I'll be going through a few considerations from the corporate angle. The first being your portfolio structuring, which means that companies need to decide which businesses they want to stay in and which they want to exit from. This is your fundamental decision. Which part of your portfolio would you like to retain, or which one you'd like to dispose, merge, or even acquire? Whether you're considering to convert any of the structures from an offshore to a free zone, these will be driven not only by the profit the business is making, but also the shareholder return, the valuation of the company, whether the businesses will have any kind of foreseeable future. So these are, some considerations that can be kept in mind. An insurance policy will also benefit at this point to absorb any of the unlikely liabilities that may arise from this. So that's the first one. The second being your workforce. With the ease of working from anywhere and virtually has its benefits, but at the same time, we cannot ignore the great resignation with the shortages of talent that we're facing globally. So it is a good chance for you to move your staff to a back office in a lower tax jurisdiction, and those who are the non-decision makers, because then that can have a direct and dramatic tax implication on the location that the decision is being made on. So again, a back office can equal to lower costs, more talent retention, and more capabilities. And your last point being digital. So as we see that companies are moving and investing more into technology, and this goes hand in hand with the investors putting their stakes in such companies. And with the ESG coming to the spectrum, it is a social obligation, and tax fits right in. And you may ask how, because as investors, they want to know where they're putting their stakes in, whether that company is not evading taxes or having any ramifications, and is being transparent. So these are the key considerations that require parallel focus while you're planning ahead. So you can see that the conversations that we're having from a tax perspective is changing, dealing with the OECD, BEPS 2.0, and the Pillar 2. This is going to intensify the reporting magnificently. So multinational companies that would move to a lower tax jurisdiction just to make more profits is mostly over. Again, there's no need to panic. We just need to be more pragmatic, more proactive, because we're still better than many other countries. And again, we rather be moving slowly in the right direction than wrong in the and fast in the wrong one. So again, to add more tax flavor to the conversation, we'll be hearing more from the panel segment. And now I would like to welcome our dear friend and well-wisher, Dr. Ashraf Mahdi, who is the Chief Economist of Dubai Industries Export Markets in the Department of Economy, Tourism Dubai. Over to you, Doctor, while I'll be still lurking in the background.
Thank you very much. It's certainly a pleasure to be here. And before we carry on, I'd just like to echo what Inam said, that it's certainly not a stage where we have to panic. It's more a stage where you have to plan and develop and come up with effective strategies, because there are considerable opportunities ahead. And I think this is one of the beautiful things. And also, I'm sure later on in the seminar you'll talk about this, is that the UAE has signed numerous double taxation agreements, and this gives you considerable opportunity to exploit that. But from my perspective, talking about how to expand on opportunities, I think it's very important to see how you can expand your opportunities going overseas. Whether you are a goods manufacturer, next slide please, Alok. Whether you're a goods manufacturer or even a services manufacturer, one of the interesting things that you will find is that in the case of Dubai, the total trade has been increasing, and this has certainly been the case even with the exception, of course, of 2020. But there again, the fall was quite small. It wasn't as you'd expect, and what the World Trade Organization was contemplating. In 2021, we expect better total trade than last year. So, in fact, there is considerable growth and considerable opportunities, both in the exports and re-export sector. Alok, next slide, please. When we look at the major imports and we look at the major sectors in the economy, there is quite a consideration towards gold, jewelry, machinery, and of course vehicles. But this is actually, and of course, prepared foods. But you'd expect prepared foods to be quite important in this particular environment where the country only has 1% arable land. So prepared foods is quite important. Alok, next slide, please. When we look at exports, you'll see that the exports is quite diverse. In fact, the UAE is the world's largest re-exporter of fresh fruits and vegetables. So that actually tells you that there is a lot of opportunities. And one of the interesting things is that the ease to which you can actually do business here allows you to bring in imports, such as prepared foods, and then add value and export them. For a country that has no gold, gold is a major export, again adding value from the local economy, and same thing base metals. Next slide, please. Re-exports has certainly been a major emphasis within the economy. And again, this is very diverse, from opticals and mechanical products to textiles to vehicles, going across to over 160 countries from Dubai. Next slide, please. Now, when we look at what are the plans, I think the most interesting plan, and this is again where I think it's important for the companies present here today, is to look at how you can use Dubai to expand your international market. One of the important things is, next slide please, look, is that you're actually increasing exports, and it's going to, in fact, total trade by 2025 is expected to reach $2 trillion. So that actually tells you that there's considerable opportunity for you to grow your markets. And again, you would have seen over the weekend, the UAE has signed the CEPA with India, which is the Common Economic Partnership Agreement. In fact, I was actually on the negotiating team. And this is just one of several CEPAs that the UAE will sign. And the whole aim here is again to create open access into international markets. And again, I emphasize it's not just for goods companies, but it's also for service sector. And one of the cornerstones of opening and expanding the new markets is in the manufacturing sector. We have the Dubai Industrial Strategy, which is again hoping to increase exports of manufactured products. Currently, manufactured products account for about 14% of GDP. But the idea is that this will expand and become a major pillar within the export base of the Emirate. Next slide, please. Gold, as you saw, was a major factor both in terms of imports and exports as well as re-exports. One of the important things is that we work in Dubai Industries and Exports with industry groups. So this is an example of how we worked with the gold and jewelry sector to create an industry-specific strategy And the idea behind this was a strategy that sought to capitalize and synergize on the location of Dubai, the fact that it's very close to the sourcing markets of Africa, South America, and the consumer markets in India and Hong Kong. So this is, again, very, very important as to how we build new sectors, and gold, again, is very, very important. Next sector, next slide, please. Another very important sector, in fact, in the CEPA that's been negotiated with Indonesia, halal sector is becoming very, very important. Now, when we talk about halal, we have to understand that it's actually a holistic concept. It's not only just products, but also halal services such as tourism, and of course, Sharia compliant financial services. This has been a major growth, and with greater number of CEPAs being agreed, the halal sector will be a continuous growth and a trade driver coming from Dubai. Next slide, please. One of the important things that we see in the halal sector is that it's not just the goods, but also what is happening forward-looking. So, in fact, some of the innovative aspects we've got is something called halal fintech. So this is looking at things like how fourth industrial or aspects of the fourth industrial strategy, fourth industrial revolution, can be used in Islamic finance, such as the use of blockchain. Already we see aspects where blockchain is now used in Islamic or Sharia compliant fintech solutions. Same things with cryptocurrencies, although the jury is still out as to whether cryptocurrencies are totally halal or not. Next slide, please, Alok. One of the important aspects that we do within Dubai Industries and Exports is how we support the UN Sustainable Development Goals. The UN developed 17 Sustainable Development Goals. The aim of these goals was to create a more equal and inclusive world. And an important aspect of that is how we create opportunities for two very important parts of our community: A, women, and B, youth. In the case of women, we actually have a specific program, which is She Trades MENA. And this is a program that actually hopes to assist women-owned businesses. And again, I'll point out they are also in the service sector. So the idea is, how do you grow women businesses? And again, the academic literature as well as practical evidence shows that women have certain challenges. And through this program, we have assisted over 1,000 women since February 2018. And we're hoping to do a lot more. We have also done a lot of capacity building, and we also try to connect women to large-scale buyers. In fact, one of the programs we're running is how you can be a supplier to a multinational firm. So any women-owned businesses out there, I would strongly urge you to be a part of She Trades MENA. Next slide, please. Exporting has various different complications. One of the complications that exporting has is that getting your accounts receivables is always a problem. And again, Dubai has come up with a solution. One of the solutions is something called Cargoes. Cargoes is a fintech-based solution owned by DP World, where you can actually secure your accounts receivables. So the idea is that you can actually, so you focus on finding a buyer, and Cargoes will actually ensure your accounts receivables. Now, we do also have export credit insurance, or ECI, but that is for larger tickets. So Cargoes actually starts with very, very small ticket sizes. Can I have the next slide, please? And one of the other aspects that we're working with is with DP World, is how to get your company known in global markets. And again, I would strongly urge you to look at Dubai.com. This is a global sourcing platform from Dubai. And the idea again is how you can get your company known in global markets. Look. And I think I will stop there, just bang on my allocated time, Erham. But again, if anybody has any questions, I'm sure Elam can forward my details to them. And I'll stop there.
Thank you so much, Doctor. Pleasure.
Yeah, hello everyone. Thank you, Dr. Mahathir, for these insights. And I'm Alessandro Valente. I'm the International Tax and Transfer Pricing Manager at Crowe UAE. I will be moderating the short panel discussion on the introduction of corporate tax in the UAE. We have 25 minutes allocated, and if you have any questions, please, we invite you all to send them to tax.services@crowe.ae. Today we will discuss this exciting topic with three experts. They come from different backgrounds, but nonetheless, they can provide very interesting insights, I believe. The first one is Mr. Muddar Kuja, which is the elected Secretary General of the Austrian Chamber of Commerce. The second is Ms. Pavitra Balaji, who is the Tax Director for Asia, Middle East, Turkey, and the Africa regions for General Electric Corporate. And then finally, we have Mr. Andreas Flegger, who's the Deputy Head of Advantage Austria UAE. So as I said, together they will help us lay the groundwork for what I guess they believe the corporate tax legislation will be in line with global best practices. So despite the limited information that we currently have, which is limited to the FAQ released by the Ministry of Finance, one of the most recurring questions is how does the announcement of corporate tax regime position the UAE in relation to its GCC neighbors? Mr. Kuja, given your decades of experience in and out of the GCC region, could you please provide us with your opinion on the topic?
Yes, a wonderful good morning. Do you hear me?
Yes, clearly.
Yeah. Wonderful good morning, and thank you for inviting me having this session with your kind self and also the audience. Yes, actually, the entire GCC are trying to get out from the revenue generating economy to a real economy. Some of the GCC countries, the majority of them, like Qatar, Kuwait, Oman, and Saudi Arabia, were already introducing corporate tax. And if we have a look into it, then it appears that Saudi Arabia is having 20%, up to 20%, and then Kuwait and Oman is around 15%. Qatar have this in 10%. Bahrain is the only country who didn't decide till now to join this corporate tax, and the Emirates have decided to do this. By the way, if we have a look into the worldwide corporate tax, we will see that only 4 countries worldwide haven't introduced corporate tax till now, and this is Emirates, Bahrain, Bahama, and Vanuatu till now. So if we go to the tax which is proposed to be introduced to the corporate tax, then we will see it will be amount till 9%, which will put the Emirates next year in the position of the 8 best countries in the world, having a less corporate tax. So in the context of GCC, still Emirates is one of the best lowest corporate tax country, and this is very important.
Yeah, it's thanks, Mr. Kuja. I thought it was important to start and kind of put into perspective the tax rates that have been announced so far in relation to our GCC neighbors. I would now like to involve Ms. Balaji to capitalize on her deep technical knowledge and gain some insights on whether you see the need for UAE-based businesses to restructure in any way, given the recent announcement. And please, if I may say, can all the panelists switch on their camera for the duration of the panel? Okay. Yeah, thank you very much. Yeah, please, Ms. Balaji.
Hi, Alexander. Can you hear me?
Yeah, perfectly.
Right. Thank you, first of all, for the opportunity to be on this panel and speak to your clients and colleagues. It's a real pleasure. You know, with the UAE being the last in the list of countries in the region getting into corporate tax, it's exciting times for us, right? Like, you know, my role in General Electric is to oversee taxes for multiple regions. So I have the benefit of looking at both the similarities and the differences between countries as they go, you know, into different types of taxation, both in Middle East, Africa, and Asia. And I must say that, you know, when a new tax is introduced in any place, right, it's actually an opportunity for us to reset some of our structures, processes, in a way where we get prepared, right? And UAE being the last has the benefit of us leveraging from the experiences in other places. And I think that while the legislation has been very high level at the moment, there is definitely clear guidance on certain aspects which they have already indicated would be the framework on which the tax would be working, right? An example to case is that they have committed that the exemptions for tax and free zones would be kind of respected, even though the corporate tax would come in, right? That, you know, by itself gives an opportunity for some restructures, because in the past, we've probably as companies, you know, we have the unique Emirate-based licensing requirement in the country, which is creating multiple branches, multiple footprints, and you know, it's been a little more. I think with VAT coming in, we did a bit of the first cleanup, let's say, because it required us to do the first level of disciplining of how our you know, operational processes are aligned with both on the accounting side as well as on the you know, regulatory side with what the VAT law requires. Now, with this, it is another step forward, right? And let me give you an example. The if you are a business which is into export-oriented operations, right? In the past, it didn't really make a difference as to whether you're doing that from a mainland entity or a free zone entity. But with the advent of the corporate tax, it gives us an opportunity to relook at our operations and see whether there is a benefit to take it to the right place, so to speak, right? If you have exports, does it make sense to, you know, kind of ring fence those export operations out of a free zone and benefit from the tax holiday? But I must, you know, give out a big caveat before companies start looking at this. My sincere advice would be for companies to do pre-work and get, you know, kind of to do more assessment of their operational processes and come up with strategies. But I would definitely urge people not to rush into setting up anything without looking at the final law and the fine print of how the law is going to come out, right? The second and most important thing is it is not about changing your invoicing to a free zone company, right? The corporate tax, the essence of how corporate tax works is that you should first have substance in your operations to justify whatever is your accounting and reporting, right? So companies will need to then think about, can I move my, ring fence my export business as a separate unit, which works independently of my other in-country operations? What needs to change both from an, organizational setup perspective, supply chain perspective, to make these two separate? Because they have indicated that if a free zone company is going to have operations in the mainland or transactions with the mainland, that may jeopardize the exemption status. So we need to understand, is that practically possible? Would I be able to run my supply chain such that, these are different sourcings which happen from within and outside, if that is how the legislation is going to point to it? So first is the legislation itself, and the second one, of course, is, where does the company sit in the whole thing here?
Yeah, thank you, Ms. Balaji, for touching upon the free zones. That was actually the second question that I was going to touch upon, and I agree that as of now, it's wise to encourage an impact assessment for corporate tax, but any other move will have to be supported by more legislation, or at least announcements by the Ministry of Finance. Thank you. I would now like to conclude this first round of the panel with Mr. Flegger, and I think his position is interesting because Advantage Austria provides a broad range of intelligence and business development services for businesses, and it does so in several industries. So I think it is just right that we ask Mr. Flegger which are the industries that he sees will be most affected or likely to be most affected by the introduction of corporate tax regime in the UAE.
Excellent. Thank you so much, Mr. Valente. Thank you for hosting today's webinar and giving me an opportunity to be part of this panel. To give you a little bit of a background information, Advantage Austria is the internationalization agency of the entire Austrian economy. So our office and the 100 offices that our organization operates all across the globe is basically a structure that assists any Austrian business that wants to do business outside of the Austrian borders, which of course for Austria as a small country, as a small market, is extremely important. The Austrian economy is largely driven by exports. About 60% of our GDP come from exports from international business, and more than 60% of employment opportunities in Austria are also related to international business in one way or another. So that just shows the immense importance that international business, cross-border business has for the Austrian economy and each and every Austrian business entity. The United Arab Emirates is a very interesting destination, and I'll just hold up this little book for a second that's actually titled Austria and the United Arab Emirates, 45 Years of Partnership. We published this book last year during the celebration of the Golden Jubilee in the United Arab Emirates, and it just shows that Austria and the UAE have a relationship that goes back more than 40 years, 45 years. Our office, Advantage Austria Abu Dhabi, was actually opened 45 years ago, and since then we've been assisting Austrian businesses in the entire region. The Austrian investments and the Austrian business interests in the United Arab Emirates and in the Middle East region cover almost all sectors. We do have a little bit of a focus in construction, in energy, in manufacturing for the food sector, which corresponds to the traditional strengths of the Austrian economy. To come back to your question of which sectors will be most impacted by the newly introduced corporate income tax, it is of course an interesting question, and as mentioned by the other panelists before, we definitely have to wait and see how exactly the legislation looks like, what the minute details of the regulation will be. To answer the question, I think the more capital intense sectors such as construction, such as the construction of steel mills, steel plants, manufacturing plants, which is something that Austrian companies are involved in, due to their capital intensive nature and the resulting profit ranges, are going to be more affected by this sector. But to be honest, again, with Austrian businesses having been in the region for more than 40 years, they are well adapted to the pace and kind of change that especially the United Arab Emirates have seen, and this is, as Ms. Balaji also mentioned, the logical next step in further developing the local policy framework.
Yeah, definitely, Mr. Flagger, and thank you for bringing up that booklet. We as Crowe UAE have a number of copies which we'll be more than happy to distribute with the panelists that will be interested. So thank you very much. Now for this last round of the panel, I would like to go back to Mr. Kuja and ask him what was the diplomatic and business community's reaction to this announcement of a corporate tax regime in the UAE, given his involvement.
Thank you for the question. We have to separate between the diplomatic approach and the business approach. To be very honest with you, there is a lot of reaction till now about the diplomatic from the diplomatic sector and from the business, since this announcement is very close to us from the time-wise. But let me try to elaborate on the diplomatic approach of that, and which is the official statement of the countries, and maybe elaborate a little bit back to July 2021. We have had an agreement. 136 countries worldwide agreed to have a minimum of corporate rates, and this is driven by the very intensive, profitable technology and digital heavy business models who are acting worldwide. And Mrs. Lagarde, the president of the European Central Bank, elaborate on that to avoid escaping from tax heavy tax countries to other countries, and to have a fair treatment to these companies. It should be introduced, and therefore the international community is welcoming this. This is the first. On the other hand, the business community, of course, if you have some additional burden, it won't be of favor for these people. But imagine, and I would like to compare between the corporate tax in Austria and in the Emirates, if it's introduced, and when it's introduced next year, of 9% compared to 25% that we have in Austria. So it's still a very interesting tax country, and we have a double taxation treaty as well. So there is a very interesting this, and the indication that what we have heard, that there will be an ample time to introduce these tax regime, the corporate tax regime, and the companies will have till mid of 2022 have a time to comply with the requirement of corporate tax. And the companies, the business, actually has had some concerns, because introducing the VAT to the business last time, this came also close with some difficulties on the procedure and the application of the VAT. So there is some concerns, but at least this is a fair introduction of the income tax, and everybody also have to understand that Emirates is getting also in a position, a better position to having better communication of the banking sector if the corporate tax has been introduced, and other as well. Again, maybe we should elaborate a little bit on that. We are talking only on the general business when it's come to resource like oil sector and banking sectors. They have already their taxes in the region, also in Bahrain, not only in the Emirates, but we are talking about all other business.
Yeah. Thank you, Mr. Kuja. And continuing to this comparative approach, I would like to go to Ms. Balaji to ask her whether she sees or foresees any similarities between the announced UAE corporate tax regime and the one that has already been adopted by some of its neighbors. I think, for example, Saudi Arabia or Qatar.
Right, and I think, like Mr. Kuja mentioned, right, the driver for these taxes at the tax regime is really the OECD and the BEPS protocol. So it is kind of driven by a global initiative to kind of normalize tax regulations broadly. And to that extent, I think the UAE has done a nice job of looking around and trying to adopt some best practices from not just the neighbors, but also from more mature jurisdictions like the EU and the UK, which is very welcome, right? I personally do believe that when the tax is introduced, the idea of how it is being rolled out, clearly the indications are that it is going to be less, they will try to make it as easy on the taxpayer community as is practically feasible, to some extent maybe going the extra mile beyond what we see in other countries in the GCC, perhaps because they had started the corporate tax much early on, and they are now having to move from an existing regime into a slightly more convenient regime, whereas the UAE, with the benefit of coming in late, have the best advantage of taking the best practices right on. An example to case is that they have already indicated that there would be group tax registrations permitted, which is not there in any of the other GCC countries, right? And given the amount of intergroup transactions which we see in most of the countries in the GCC, this is a welcome step, because all intergroup activities are then literally tax neutral, right? They don't, eventually attract tax, because you would be able to club the results of your group companies and report it as one consolidated entity for corporate tax purposes. So this is a best practice, which you see more in the Western countries like, UK and parts of EU and, Australia. So you don't see that much in the Middle East as such. So UAE has been the first to introduce group corporate tax regime, coming in late. So they had the benefit of picking that up as an opportunity for rolling out. They've also indicated already that the adjustments to the statutory profits to come up with the corporate tax numbers, they would try to keep it as minimum as possible to avoid very complicated differences between, the accounting profit and the tax profit, which again is a welcome measure, right? Mm-hmm. Similarly, as going with the theme of trying to make it as easy on taxpayers as possible, they've given an indication that dividends and capital gains would not be subject to tax, which is again quite a positive step for the investor community as such. So I think by and large, our expectation is that it would be, tax is never easy. Okay, and it is additional compliance burdens. It expects corporates to be more disciplined in their processes, in their accounting, in their documentation. So one cannot escape that. But given all of that, I think the way this is going to be rolled out in the UAE would be probably a little more, taxpayer friendly than in some of the other jurisdictions. Yeah. And I think the other aspect I'd like to briefly touch upon is also the fact that—
Pavita, sorry, not to interrupt, but we're kind of running out of time. I would like to squeeze one last question for Mr. Flegger. So if you can just maybe conclude in like 10-15 seconds, and I'd like to
I was just to say that it is important that you, wait to see how the actual operations work, right? The one disadvantage UAE has is that there is no tax department which is fully functioning on the corporate tax front. So similar to VAT, we would see teething issues, quality issues, resource issues on the FTA side, as we saw with even the VAT regime rollout, which would be something which we'll have to deal with as it comes.
Yeah, definitely. Thank you so much, Ms. Balaji. And as I said, I would like to squeeze in one last question for for Mr. Flegger, given his position, and ask him how he sees these corporate taxes impacting foreign investors' attractiveness to the UAE.
Yeah, and to get straight to the point, I think the UAE will remain a very attractive destination for investment and also as a base of operations. As we've heard from the other panelists, the announced tax rate is still comparatively lower than almost anything else that's available. The attractiveness of the UAE, the infrastructure in place, the global interest in this area, the global representation of businesses, service providers in the UAE as well, still remains strong, and we really see this introduction, of course, as a challenge to businesses, because we're still missing a lot of the detailed information that actually businesses want, so they can plan accordingly and set up their operations, set up their accounting, set up their reporting to ensure that they fulfill all requirements as best as possible. But at the same time, we welcome this introduction of the tax, because it is another proof that the UAE is serious about diversifying their economy, diversifying the sources of income, of revenue for government, and that's an important step, towards the future, towards developing, diversifying, and further opening of the economy in the UAE. So overall, of course, it is a challenge. We hope that soon there will be more clarification as to the details of the regulation, but all in all, it's a positive signal. Just like the adaptation of the work week in the United Arab Emirates was another step in moving the economy a little bit closer to the Western world, to the Western economy, to the Western working hours, and that is something that by and large the enterprises in the region welcome.
Yeah, I agree. Thank you very much, Mr. Flegger, and thank you all the panelists again for their excellent insights, and thank you all for listening. I would now like to leave the floor to Mr. Alok Desai, who will provide us with some commercial company law highlights. Thank you all again.
Thank you so much, Alessandro. And speaking about the federal law number 32 of 2021 that has been introduced with effect from the 2nd of January 2022, we would like to just touch base on the key highlights here with the law. Okay, there have been several changes that have been introduced in the law, and what we've observed is that these changes are more for the benefit of doing business in the UAE. Like the introduction of the SPAC, which is the Special Purpose Acquisition Companies. The Securities and Commodities Authority have taken a step forward by introducing the SPAC. The SPAC allows you the flexibility to raise the capital from the stock exchanges by going initial public offering from the public, and the capital can be utilized for acquiring entities which are more private entities but are growth oriented companies. They have a lot of potential, but for some reason are not yet been made public, and the persons who would be taking these companies on making them public are known as sponsors. These sponsors are basically institutions like investor institutions and investment bankers. So they have the knowledge and the understanding of the markets, of how the markets would play out, as well as the industry. And an individual, when subscribes to the initial public offering that comes up by the SPAC, would be actually subscribing based on the experience, the expertise, and the credibility of these sponsors. These SPACs have been promoted by all the stock exchanges here in the UAE. There is a lot of initiative being taken, especially by the Abu Dhabi exchange as well. What's in it for the founders, you may ask, for the founders of the company? So the founders of the company, when they through the medium of the SPAC would take their company to the public, one, they have reduced the number of complexities that they have to otherwise face in the case of a traditional IPO. Second, it unlocks the value of, it's an unlock of the value of the holdings that they have. So a SPAC is a very good medium for sponsors like institutional investors to identify companies with a lot of growth potential and take them to public. And this is really a welcome move. We also look at the introduction of the SPVs, which is the special purpose vehicles. As the term says, this is a very sophisticated vehicle that allows you to actually bifurcate between your assets and your liabilities. The benefit here is, in case of a special purpose vehicle, it would actually be transaction specific. So when you undertake a particular transaction, there may be some transactions that may be high risk and high return. But in these high risk transactions, there is always a possibility that your creditors may come back to you and the assets of that particular entity may get attached completely. In order to avoid such situations, in order to ring fence your assets and your liabilities, the SPV is a perfect model. In the SPV, only the assets that are related to the transaction can be claimed, by the creditors, and not the entire assets of the company. So there is limited liability. The special purpose vehicle cannot do any other business, any operational business or hiring as well. The whole purpose of a special purpose vehicle is to just hold the asset. There may be a question that may come in your mind that I could just establish a holding company and my holding company could, hold my tangible and intangible assets. How is that different from the SPV? Just to keep it short and to explain it quickly, the SPV is transaction specific. So in case if your holding company holds your assets, the creditors can claim against all the assets of the company. But in case of an SPV, it being transaction specific, the creditors will only have access to the claim to the assets that are involved in the SPV. The shareholders would have no liability, or the assets of the shareholders would have no liability, or any other asset or any other subsidiary of the company would not be entailed into any legal risk. So it's a fantastic way of ensuring mitigation of legal risk and financial risk both. Speaking of, the public joint stock company, there have been a couple of amendments that have happened. When we speak of the public joint stock company, I'll just quickly explain what it is. It's basically a public entity in which has its capital, and the capital of it is divided into shares of equal value, and shareholders basically subscribe to these shares, and their liability is limited to the value of the shares. So that's the public joint stock company. There have been a couple of changes that have been introduced in the public joint stock company. One of the major changes that have been introduced is with regards to the subscription of the shares. So unlike in the previous law, where the subscription of the shares by the founders would have to be in the range of 30% being the minimum and 70% being the upper cap, that's the maximum. In the new law, it has given the flexibility of the subscription to be determined by the SCA in the prospectus, and accordingly will the founders have to subscribe for it. When we look at the vacancy of directors, so a vacancy of a director could be created because of different reasons. When he ceases to hold his office, maybe because of resignation, because of his removal or his death, or any other reason for that matter. The new law stipulates that it would be the duty of the other board of directors to appoint another director in his place. And this has to be done within 30 days period. In an event that, we appoint a person, we appoint a director, and the board appoints a director, it will be their responsibility to take it forward to the shareholders for his appointment, for his appointment to be confirmed by the shareholders within that frame, and that has to be done in the first general meeting after his appointment. In an event that the shareholders deny the appointment of the nominated person by the board, then his appointment, they can appoint another person, and that person will hold the office of the director for the term that his predecessor would have held. There have been some changes with regards to the remuneration of directors as well. There has been an upper cap put on the remuneration of director, and that is with regards to the bonus. So the bonus that a director could take has been capped to 10% of the profit. And I would say that this is a very good move, because this allows or ensures that there is more amount available to be transferred to the reserves to be utilized for other activities of the company. At the same time, if the shareholders approve and if the SCA approves, then yes, even in case of loss-making companies, the maximum remuneration that can be paid to a director is around 200,000. Speaking of, there have been certain changes with regards to shares and discounted price shares can be issued, but given the paucity of time, we will not right now touch base with that. We'd quickly move to the limited liability companies where there have been certain changes that have been made. And one of the major changes is with regards to the appointment of the supervisory board. So unlike in the previous law where there was a requirement that the supervisory board be appointed if number of shareholders is more than 7, this has been enhanced to 15. So supervisory board basically comprises of around 3 shareholders who will be nominated as board members, and they would review the different projections, the budgets and the workings of the company, and will be responsible to submit a report at the General Assembly for the better understanding of the shareholders. The idea of doing this is it acts more like a supervisory board. So there is a move to bring in more governance to streamline the processes. Speaking of liquidation, we just want to touch base with one particular aspect here, that the liquidation time frame of the creditors being notified of their credits has been reduced to 30 days from the previous 45 days. So this should help reduce the time that generally the liquidation takes, and I'm sure that the liquidation will happen at a much faster rate now. In the corporate social responsibility, there has been a welcome change, unlike in the previous law where there was a requirement that you can only subscribe or you could only spend for CSR if you have at least 2 audited financial years of profit, and the profit has to be 2% of the profits that you've earned over the 2 years. But now that has been removed. So yes, even a new entity who is profitable can go ahead and engage into CSR activities. This is quite a welcome move. This makes sure that corporates are not only focused on profitability, but they are also becoming more socio and economic centric. So with this, we conclude with the federal law number 32, and I would now request Mr. Marcus Susilo, partner at Crowe, to share his concluding remarks, please. Thank you. Over to you, sir.
Yes, thank you very much, Alok, and thank you for all of the attendees and panelists to actually join us. Of course, it has been an interesting time, at least in the beginning of the year for 2022. There's been a couple of changes. One of them that we discussed today is corporate law changes, and then the other one is the introduction of corporate taxes of next year. So yesterday, I just read the newspaper as well, that one of the ministers just said that in the next few weeks we expect to receive more details, especially on the corporate tax part. And again, it has been also received with positive vibe from the business community as well. So to actually fill a couple of comments from the panelists earlier today. Now, as Crowe UAE, we actually have a knowledge sharing series of webinars, and soon, when the COVID measures allow, then we're going to host and more seminars like we used to do before the COVID. Now, the next one is going to be on the 2nd of March, where our colleague Michelle Reitenberg, our tax director, is going to talk about VAT on digital services in the UAE. So if you are interested, please follow our linking Crowe UAE to receive more details of this upcoming webinars. Now, if you have also some more some questions and queries, please do not hesitate to contact the speakers. And especially when it comes to taxation, as Alessandro has mentioned earlier, is tax.services@crowe.ae. So if you send there, then we will be very happy to answer some of your queries. Okay, thank you very much.